Good morning, traders and investors. My name is Roger Scott. I'm the head trader for Wealth Press. Today is December 22nd. It's just a few days before Christmas. Boy, oh boy, I got a lot to talk about. First of all, look at the economic data. We had the GDP report come out. We've got corporate profits that already came out. Consumer confidence, that's the big report this week. Existing home sales, I believe, will be positive. And tomorrow we've got jobless claims and new home sales. So between today and tomorrow, we'll have a very good idea of how the housing market's doing. We'll have a good idea of how the jobless claims is doing. And we already know that how the GDP is doing. We'll talk about that right now. The biggest factor right now is the economic package that the government passed this morning or last night. Let's see how the market's reacting to it, and let's get into it right now. So as you could see here, we had a huge news yet last night. We had the U.S. green lights, the stimulus, and as you could see here, the market is down. This is not happiness, folks. This is not a positive sign. NASDAQ 100 looks pretty good, but look at the S&P. It's up 2 points. The Dow's down right now, 50, 30 points. The Russell is barely up. This is not happiness. You would think the market would be up like 300, 400, 500 points. It's not. And remember, the last several days, we've been opening higher, except for yesterday. We've been opening higher and moving lower. And the retail sales report last week and the jobless claims all but ensured that there would be no end of year rally. Okay? So again, I'm just pointing everything out at you. I'm just kind of giving you the broad strokes. The big report is going to be the jobless claims and the GDP that just came out. If you look at the GDP report, I just wanted to give you the expectations. Consensus, we were going to grow at 33.1. We were in a fairly tight range, and we came out slightly ahead of expectations, which is not bad. But again, this is bouncing from a really nasty period. This isn't in an isolated space. So again, and if you look at here, U.S. Department expanded it at a record 33.4% from July to September. That's the last quarter. But what about October, November, and December? Remember, retail sales have been slowing down. The Commerce Department said Tuesday delivering the last of 3 estimates on the economic third quarter performance. But it's likely that a resurgence in COVID cases slowed growth sharply during the last 3 months of 2020. That's right now. So this is lagging, all right? Consumer spending surged at an annual rate of 41%, and private investments shed up 86% to third quarter. Employers slashed 22 million jobs between March and April. But the point is here, an uptick in new COVID cases now averaging about 220,000 a day, up from fewer than 35,000 in September, is causing governments to issue lockdown orders and keeping Americans at home. And that's the problem. And again, folks, vaccine for healthy people, we're not getting it until March or April of next year. What happens to this quarter? What happened to the last 3 months? What's going to happen to the next 3 months? That's the problem. Growth in gross domestic product, the broadest measure of economic output, is expected to slow to just 2.8% in the fourth quarter. That's not good. The outlook would have been even bleaker if Congress hasn't passed that $900 billion economic relief package that includes $600 stimulus, an extra $300 unemployment. But as you could see here, how are the markets doing? Not really great. I mean, the S&P, the day after the stimulus is released, the night after, we're up 1.75, 3.75, $3 negative on the S&P, on the Dow. This is not a happy reaction, okay? So let's talk about global economy. But the reason you're not seeing a happy reaction is because the number of COVID cases is increasing beyond the amount that the stimulus can help our economy. So that's the real problem. So European shares, U.S. futures advanced, if you can call this advanced, after lawmakers passed an approved $900 billion package. The long-awaited economic package approved Monday, and today's Tuesday, and things are just not looking that great, helped offset, well, partly offset worries over the discovery of Britain of discovery in Britain of a new potentially more infectious strain of the virus. That's bad, folks. This is really, really bad. It has added fears or even worse economic hardship if the new strain spreads to other countries or proves resistant to the vaccines. And this is what I was talking about. I was telling you guys, we're not out of the woodworks yet. The $900 billion relief effort for the U.S. economy includes $600 in cash payment for most Americans, extra benefits for laid off workers, and other financial support. How far do you think this $600 is going to go? The market doesn't think it's going to go very far. We got about 15 minutes till the opening bell, and things are not looking pretty at all. So again, I'm just pointing that out. Now, looking at the S&P, let's look at the S&P. Actually, let's start with the NASDAQ today. Looking at the NASDAQ, we look like we're above yesterday's high, but again, I think we're going to just kind of drift around the current level. I'm not seeing a massive rally. I'm not seeing anything. I'm kind of seeing us staying within a range or more downside developing. I'm not seeing higher prices, and I'm seeing a lot more vulnerability. As I mentioned to you several days ago, momentum levels. I'm going to show you again. We got 88% of stocks out of NASDAQ 100 stocks. So 88 out of 100 stocks are trading above the 200-day moving average. And 80 out of 100 are trading above the 50-day moving average. That's too much, too fast. As you could see here, momentum levels started cooling off already. And I think we're going to go down to 50th, 60th, 30th percentile, which would mean a slump in the major indices. Furthermore, technology is leading, but that's semiconductors. Everything else, the consumer discretionary stuff, is lagging behind industrial and material. And if I was a betting man, that's where I would be looking. I would be looking at industrial and material. So let's look at the S&P 500. And let's see what the strongest industrial and basic material stocks are. FCX. Gee, I want to show you something, the power of this. Let's go back 3 months. Look where FCX was 3 months ago. It was in second spot 3 months ago. Today, number one spot. Align Technology, no, this is consumer discretionary. L Brands, that's retail. Coach is retail. Kohl's is retail. Invesco, I'm not sure what they do. That's semiconductor. Twitter's definitely not it, but Albemarle. Here are some stocks that I like for the current economy. I like General Electric because home sales are going to continue moving up. The numbers have been just terrific, really, really terrific. So General Electric is definitely, I see upside. Albemarle, I've been talking about this for the last 3 weeks. I like this stock. It's in the industrial basic material. They do production they make equipment and supplies for non-traditional energy sources. And General Electric is great for the housing market. So Albemarle, General Electric, I can't pronounce this to save my life. And Freeport McMoRan, FCX, ALB, and General Electric. Let's see if there's any other ones. PayPal's pretty good too. I like PayPal. FedEx. So we got FedEx, we got PayPal. PayPal is good because they're going to start accepting cryptos in 2021. So again, stay within the top, stay with this area. I like FedEx, I like PayPal, I like Discover Financial Services actually because that's for consumer credit, not commercial credit. I like Mosaic Company, I like General Electric, I like Albemarle, and I love Freeport. Those are the companies I would be focusing on right now. To the downside, Guild, what a sell. AMT, that's a sell. Dish, that's a sell. Regeneron, that's a sell. Intel, that's a sell. Remember I told you about a spread going long Discover and going short Intel? Well, look, that was several months ago. Look where Discover is. It's on the first page. It's like the top 20th. And Intel is all the way in the last page down here. Like one is the top 10 and the bottom is the bottom 5. Anyhow, folks, it's time to be cautious, time to be defensive. Don't be a hero. We've got a lot of reports. We got employment report coming out on, let's see here, tomorrow, because it's a short week. It's a fragmented week. I would be very, very cautious. Remember, it's a holiday week. Be careful. Take money out of the stock market or rotate into safety. This is not a time to be a hero. Definitely not. It's time to be quick and nimble. ETFs, cash, defensive, shorts, hedged portfolios. That FCX is a good stock because it's copper. It's a copper mining stock. This one right here, FCX. We've been talking about this stock for a while now. As a matter of fact, FCX Aligned, we've been talking about it all year. Now, folks, before I let you go, I've got some for you. Traditional investing research is becoming obsolete, and that means hours and hours that you've spent studying stock charts and squinting at spreadsheets is a massive, massive waste of your time. You need a new way, a totally new way to level the playing field against Wall Street and its lightning fast trading activity without putting your entire portfolio at risk. Now, here's the good part. Future of Wealth head trader Lance Ippolito's weekly Blitz Alert can help you do just that. In it, Lance shows everyday investors just like you how to capture predictable profits with trades that could pay you overnight. And folks, I'm not talking about day trading. I'm talking about in Monday, out on Tuesday, in on Monday, out on Wednesday, every couple of days, swing trades. This is perfect swing trades. This is a perfect example of what I'm talking about being nimble. Quick trades. Don't miss your chance to collect these 24-hour windfalls with Lance. He is onto something here. And I love Lance's trading. I mean, just watching this guy makes the hair on my neck stand up. This guy knows what he's doing. This guy's, in my opinion, this guy's a pro. He's a Wall Street insider. You got to check it out. Click on the link below to watch Lance reveal his top trading secrets. Do it now. Get in on this now before New Year's. Change how you trade. Change how you look in the markets. Learn Lance's techniques. There's no cost. Check it out now. Do yourself a favor and have a great day. Bye, guys.